Yes. What's going on, family? What's going on, guys? Welcome to today's stream. And we are excited to be here with every single one of you guys today. We are actually going to be watching the news release live in real time, and then pretty much see exactly how the market reacts to the actual release of the data. And then from there, guys, we can obviously have the discussion on what we think can actually happen next, right? But I see we got a bunch of you guys in the building with us today. Big shout out to every single one of you guys that are rocking with us. For right now, we have almost 60 people on, which is absolutely amazing. Can I please just get one favor from every single one of you guys? Go ahead and smash the like button, family. All right, go ahead and smash the like button just so that we can get this video out to a more broader audience, right? Let YouTube know that you guys like this type of content, and they will expand it for us, right? So definitely go ahead and smash the like button. It definitely does a lot for us tremendously on our end, and we appreciate you guys for doing that. All right, so like I said, guys, we do have, again, the federal interest rate decision coming out in about 20 minutes. They're expected to raise rates around 75 basis points. Obviously, we don't know exactly what they're going to fully do. Right now, we have to just stick with what the projections are telling us. So that's what we're going to stick with, at least for me. I would be genuinely shocked if it doesn't come out at 75 and it comes out at 50. I would be shocked and surprised. I don't think it's going to happen, but you just really never know, right? So But that's the plan for today, guys. Analyze the markets, look at the data, come up with a bias once the data is released, and then see what we can pretty much, if there's anything to take advantage of, we will obviously give it to you guys. But if there's nothing, then we're not going to force anything either, right? But we do got a couple of us on the call today. We do have the man, the myth, the legend, Mr. Skaggs with us today, Mr. Encyclopedia, who's also going to come on here and give his insights, right? His thoughts and opinions, guys, on the actual market as well, based off the data, based off the information, and hopefully we can give you guys some valuable sauce that can really just help you guys for sure throughout the rest of this week, all right? But let me just see what we got here. I see we got Dallas in the building. We got Estonia in the house. Go ahead and drop those locations in the chat as well, family. All right, go ahead and drop those locations in the chat. And yeah, we're gonna go ahead and get this thing started, guys. I mean, really not too much to talk about before the news, but I do just want to update you guys on a few trades that I was talking to you guys about earlier this morning. So we actually did have our New York session this morning, and I was looking for an opportunity on GJ, guys, to look for something like this to go bullish. We obviously did not end up doing that. So I also ended up updating, guys, my trading journal here. All right, so just being fully transparent with every single one of you guys that have been watching us. You guys can see exactly what happened. So I ended up taking 2 GJ positions by accident. I didn't even mean to put 2 of them open. So I ended up closing one pretty much immediately, right, which caused me to lose around 9 pips because of the spread and just because how price moved. All right, so I did end up taking around a $30 loss on this trade, guys, that really wasn't supposed to be placed. All right, so I lost 0.15%, which I don't care about that one, right? But the trade that we actually did look at this morning, and the one that I actually did end up taking, guys, was this GJ. All right, now, again, we did end up losing on this position just because the market just kept on rolling over. So we lost around 22 pips, which equates to just under $40, including the commission. So I lost around 0.4%. But if you guys really look at this chart right here, right, and this is what I really want you guys to get, right? How many wins and how many losses have I gotten so far? And this is literally all just the trades from this week, by the way, right? Literally just trades from this week, right? I mean, but look at how many trades I've taken. And look at the wins and the losses, right? The red is clearly showing that I took a loss for that trade. The green is showing that I took a win. The blue is just that I ended up deleting that trade itself. I never actually ended up getting in. But if you look at this, guys, we have 1, 2, 3, 4, 5, 6 losses. And we only have 1, 2, 3 wins. All right, so we have 6 losses. 6 losses, guys, but only 3 wins. But let's look at the total growth so far. Right, we're up still 5%. Right, we're up 5%. That's crazy, right? So, and that's why it's so important, guys, to understand the importance of risk to reward when you're actually trading, right? Because I don't care about win rate. I don't care about trying to be 100% accurate, 90%. I don't care about none of that. I care about finding the best opportunities with the best risk to reward, right? Because we can have moments like what I'm experiencing right now, right, where I have literally double the amount of wins, right? I have double the amount of wins, or I have double the amount of losses compared to the wins, but yeah, I'm still up 5%. And the reason for that, guys, because look at the percentages on how much I'm losing, right? Negative 0.01, 0.12, 0.15, right? This is my biggest loss that I just took for 0.40, right? But everything is less than 1%. But look at the wins, right? Obviously, this one right here is what really got me up top, this gold win, right, for 4% alone. And then we also have this one for 0.5%. All right, and we also have another one up here for around just shy of 2%. All right, we actually did have a loss that was a little bit bigger, around 0.4, 0.56. But the whole point of this, guys, just look at this, right? 3 wins, 6 losses, but we're still in the profit for this week. All right, risk to reward, guys, is the name of the game. If you guys truly understand it, it will absolutely allow you guys to truly see results. Right, the reason why we're able to come on here and trade and see results, guys, is because we really don't care about the outcome of these trades. Right, we care about what we can control. We can't control the outcomes, but we can control everything else, right? Like the input, like what we're actually looking for, the setups we decide to take, how much we're planning on risking, right? And all that good stuff, our emotions. And I mean, this is just a great example, guys, of, again, just understanding how risk to reward and how valuable it truly is, right? But overall, just full transparency, this is where we're at for this week so far. Again, we are up around $1,000 or around 5%, which is not bad at all. And again, we're like literally 3 losses or 3 wins, 6 losses, but yeah, we're still in the bag, right? So that itself absolutely powerful, guys. Just something that I once I really understood the power of risk to reward, my trading has absolutely elevated. All right, because I wasn't so focused on what happened on a trade by trade perspective, right? And that's what a lot of traders do, right? They see what's going on, and based off the result of one trade, they get so emotional, or they're in their feelings, or whatever the case may be, and that usually leads to more bad trades, right? But when you're able to track your trades and you're able to control your emotions and you understand the points of risk to reward, um, you'll be in good shape for sure. All right, but let's see who else we got in the building today, guys. Let's see. We got New Mexico in the building. Shout out to you guys out there in New Mexico. We got Detroit, Alabama, Chicago, Colombo, Sri Lanka. Let's see. We got Detroit. We got the 518 in the building as well. Shout out to every single one of y'all. Do you close them before it hits the stop loss? I mean, the one you lost. I mean, this one I ended up closing early just because it wasn't supposed to. I wasn't supposed to do this trade. My fingers got ahead of myself. But this one ended up just hitting stop loss, right? I didn't play around with this one. This one just smacked my stop loss. You know, it is what it is. And yeah, I wonder why I put 18 pips. It was actually a 22 pip stop loss. Yeah, so yeah, and it lost 22 pips, right? But that one I specifically let hit stop loss. Now there are other ones, guys, that I ended up getting out early, right? Or there are times where I do get out early. Which one is it? It was one of them that I actually closed out early, just because I didn't like what the market was doing, and I ended up accepting that loss as well, right? So let's see. Yeah, so it was this GJ up here, right? Our initial GJ that we looked at yesterday. I ended up closing out this one way before my stops, and if we look at the notes, I didn't like price action around where we entered, right? So that's why the notes are so powerful, guys, because you can understand exactly why you decided to make that move, right? So this is one of those trades that I ended up closing out earlier, before it hit stop, just because I didn't like the reaction that price was giving us, right? So yeah, super powerful stuff, guys, for sure. Let's see. Wisconsin in the building. What's up, San Antonio? I see y'all. London stand up. I appreciate y'all as well. Let's see. New Jersey in the building. What's going on, Linda? Shout out to that boy Alex. I see you out there in Wisconsin, my brother. Appreciate you. Can I get a copy of that tracker Excel sheet? Could we get access to that spreadsheet? I'm pretty sure that's gonna be the number one question, guys. And I have been giving it out for sure to everybody. I have no issues giving you guys the spreadsheet whatsoever. But for all you guys that are following us and will be following us throughout the Profit Society journey, we will be working on one coming up soon, guys. Right, we're gonna be working on a few things. Right, we're gonna working on one like this on a spreadsheet for you guys, one more in depth, a lot more personalized, with a lot more cool tricks involved. But we are eventually in the future going to be working on something more digital, right? Automatic, so where you guys don't have to do all this, right? All you gotta do is connect your account to the actual the product, the platform, or whatever the case we actually end up creating, and then it should do all of this stuff for you automatically. The only thing you guys will actually have to obviously input is more so like the notes and stuff like that. But like I said, that's like months and months down the road, guys, where we're actually able to create something like that. So for right now, yeah, this spreadsheet is absolutely amazing, absolutely powerful, and I think it really could. I know for a fact it could help all you guys out. I mean, let's be honest, guys, right? How many of you guys in the chat right now actually have a trading journal and actually use it? Now, let's be real, all right? Be honest with me, okay? You can lie to us, and even if you do lie to me here, that's fine. Just don't lie to yourself, right? But how many of you guys currently have a trading journal, and how many of you guys are actually using it? Let's see. I see we got North Carolina, Kosi. What's going on? We got Cali in the building. All right, so let's see. Can't call yourself a trader if you don't got a journal. I mean, I definitely agree with that. And this is the crazy thing about it, guys, right? Like, as you do get better with trading and as you continue to grow as a trader, obviously I will always use a journal, but there's going to be time, guys, where a journal is really not as necessary because you already know what you're doing, you already know what you look for, and you might have another way of tracking your results, right? For those of you guys that don't know how to track your results, for those guys that are newer, then I highly recommend you guys to start doing this so you can see exactly what you're doing, like really right here in front of your face, right? Let's see, we use that thing daily. I love it. Started this week. I do, but don't use it. Come on, Reap. You know better than that, my brother. Let's go. Start using that thing and watch what it does for you, bro. Let's see. Me, amazing. Thanks to you, brother. I love it. I love it. No, come on, Lewis. We need you to start using this for sure, brother. I used the one you shared during the boot camp. Yeah, that one is also really good as well. Let's see. I started 2 days ago. Let's go, Christian. Listen, man, as long as you guys started it, that's the key here. I have one intermittent use. Yeah, see, we got to be able to use it for everything, right? And that's why now I'm actually going to be doing this a lot more, just so that because one thing that I know, guys, is that you guys are going to do what we pretty much do, right? They say I don't want to sound crazy, but the people that are following you are going to literally do exactly what you. They're not going to do what you say to do. They're going to do what you're doing, right? Like I could tell you guys to use a trading journal, but if you guys never actively see me use one, then you're probably not going to use one yourself, right? So that's why now I'm actually going to be doing this a lot more because I want you guys to see me using this so that you guys understand how important it really is to start using it as well. Um, you know, really is going to change the game for you guys for sure. Let's see, inconsistent with my journal. We got to change that. One day I would love to show you my trading journal, but I think you will be able to show me where I can improve just by looking at my journal. Yeah, we could definitely do that, Christian, for sure, bro. We could do that for sure. Let's see, UJ is looking good for the short side. I'm waiting on mine from the mail lady. Let's go, Lewis. Let's see, what I use is my daily journal and I track my losses more to study. I love it. Abel, what do I do or put? Abel, what do I do or put in a journal? I mean, everything that you guys see right here, right? Like all this stuff is very important information. We're honestly, like I said, we're gonna improve on these trading journals, guys, because this is definitely one that the boy Skaggs had created years ago that I just pretty much started to update again with a few different tabs that I think are necessary. But we're gonna add a few other things, right? Like Skaggs mentioned earlier about a time on when we actually close the trade, right? I think that would definitely be super beneficial on when we actually decide to actually get out of the trade and the reason for that, right? So there's gonna be a few other tabs that we actually add to this, but for the most part, this is a really good one for sure. Let's see, facts I know. Don't come on, bro. Let's see, and by you showing me this gives me clarity. It's not my strategy; it's my risk reward. Yeah, and that's why I want to do that for sure, right? Just being as transparent as possible with you guys, so you guys can see exactly what the hell is actually going on here, right? But I'm gonna go ahead and share it one time for you guys as well. But keep in mind, actually, matter of fact, I'll actually share it. Let me see. Can I actually? That's not what I want to do. Let me see. I'm gonna erase all my tabs.
Hey, bro,
Yeah.
I know what you want to do, and I'm gonna just make your life easy because they're never gonna stop asking. Just make another copy of your own, and then share the one that's empty.
Yeah, because I was about to erase everything
Yeah,
just
I
to
know,
send it.
but yeah, but then when you add it back, it's just gonna be there for them again.
Yeah,
So
that's true. All
yeah,
right.
just make yeah, there you go. Make a master copy.
I got you guys, family. I got y'all. All right, so now we got a copy of the copy. Let me go ahead and just erase all this stuff now. All right, let me change all the colors, make it looking clean for you guys. And yeah, here we are. All right, so very simple, guys. Just don't mess with any of the any of the tabs if you can, because a lot of these tags, guys, have different like algorithms in it that actually calculates all this stuff. So please don't try to mess with it because you will mess it up. But let me go ahead and give this to you guys. Anyone with the link. Yep, copy link. And here you go, family. All right, and now that we got this boy Skaggs here as well, I definitely want to know your thoughts and opinions, bro, going into the news release. So definitely give me a little bit of insight, bro. What are you thinking? What are you leaning towards? I know you said it earlier today, but we have a lot of people on today that wasn't on the call this morning. So what are your thoughts and opinions on that, bro?
Yeah, so we're about 6 or 7 minutes out from the release of the federal funds rate, widely expected to be 75 basis points. Again, that would be my expectation. But if you guys were not on today's live trading session, but one of the previous days, I believe it was maybe even Sunday's call we did here on tube, I kind of said, the Fed's current target is about 4.5%, right, for like the end of the year. Um, or even like kind of into, first quarter of next year. So with that being said, if they do a 75 now, they're only about 50 away from that 4.5 goal. So whether they do 50 now or whether they do 50 after today, I think the market is, no matter what happens, the market is still going to be looking forward to a Fed that is probably going to slow down. I would say the Fed is probably closer to slowing down than they are not. So eventually it will come, right? Do I think it's today? No, I think that's unlikely. There's reason to believe it. I know why a lot of people do believe it. A lot of people have been asking the Federal Reserve to slow down. Not that anybody's opinion makes a difference. They're going to go off data. Um, yeah, I think my opinion on the day remains the same from this morning. Where whether we get a 75 or a 50, I think the markets will look forward to optimism.
Uh-huh.
So again, I'm not playing the initial reaction, right? So what happens here in 5 minutes, I could care less about. I could care less about whether it immediately falls or immediately goes up. But in terms of indices, I am expecting the day, or not even the day, but the week, because it could certainly fall all day. But I'm expecting the week to absorb a lot of this move and to continue higher into December. So yeah, for me, it's I don't even care about what the result. The thing for me is I'm curious what the market's going to look forward to,
Yeah.
and I think the market is going to look forward to again more rumors of pivoting if they don't today. So yeah, like all that liquidity build up there, like we'll take that. Don't worry. Eventually, again, it may not be today, maybe today, irrelevant, but we
Yeah.
will take it.
Nah, I definitely agree. I mean, it's something that we definitely been talking to the family about, just letting everybody know that there is very big possibilities of the markets to pretty much rebound, just because of the things that you mentioned with midterm elections, holiday season, all that good stuff, guys. Definitely could really cause these indices to really rally at towards the end of the year. All right, so that's just something to keep your eyes on, keep your mind on, and just be mindful about for sure. Now, just to piggyback on what Skag said, right? Skag said that the Federal Reserve is getting a lot of pressure from a lot of people, right? And that's true. I actually brought up the one thing that Skaggs has sent out about Congress, right? Pretty much like demanding Jerome Powell to stop raising rates, right? Now that's crazy how we now have, members of Congress signing whatever the hell they signed, right, to try to force Jerome Powell to do things. Now the thing about Jerome Powell guy's job, like his job is a tough job, right? But he's not supposed to be influenced by outside sources. Like he's not supposed to, right? Now, if he's actually gonna, you know, fall into these pressures that he's been experiencing from the United Nations, from, a few of these senators and these, yeah, a few of these senators and these people, is he gonna fall for the pressure? I don't think so. I mean, but you never know. Back in 2019, yeah, around 2019, 2020, Jerome Powell guys almost lost his job, right? I don't even know if President Trump back then can actually fire people, but there was a lot of pressure back then as well, back in 2019, 2020, when they actually did start to raise rates again, right, to try to combat that economic expansion that we are going through, and Trump immediately shut it down, right? Or I don't know if it was directly off of Trump, but he was definitely applying a lot of pressure, right, saying that he was going to fire Jerome Powell, which I don't even think he has the power to even do that. So it's going to be very interesting to see exactly how we end up closing the year out, guys, for sure, because you never know. End of the year rally is not something I will not be surprised about.
Yeah, and just to add on to that, I mean, Trump was, if my memory serves me correctly, was actually pushing for them to begin to increase rates because again they've kind of foreseen this coming. Because again, the stuff that's happening, although influenced and expedited by COVID, which added more volatility and more monetary supply because there was an excuse to print more money than they were already printing, is regardless, you still would have ended up here, right? Like there's a few of us that saw this coming in 2018, 2019, when it was just a matter of what's going to trigger it, right? So the storm was brewing for a while. It's just that it would have been a less intense storm had COVID not hit. But I believe he was asking them to raise interest rates, and the Fed was just very much against it. And again, the idea was that
Recession.
if they started doing it then, and they started doing it at a slower pace, they wouldn't have to be as aggressive as they are right now.
Hmm.
They could have just been hiking it all these years, and instead of keeping them down, keeping them down, keeping them down, they could have been 25 basis points, and it would have been easier for us to handle right when it actually kind of all came down.
Yeah, so I mean,
Um,
let's look at this right here, right? So they actually went 2018, we were at 2%, then it went down to 1.75, then 0.25. So I think Trump was actually telling them to lower it because I mean, just looking at the pattern here, right? We started raising rates in 2017,
yeah, up
2018,
into
2019. Once we got to like this 2.5, that's when Trump really started applying pressure. So I think he really forced them to actually lower rates again, just by the look of this right here.
possibly, yeah. I might be recalling the beginning of his term because
Yeah.
he's what was it 2016 to 2020? Yeah, I might be recalling from the beginning where he was
I mean, and that's
calling
actually
for them to raise it.
And this actually brings up a very good conversation as well, right? Which again, we have 1 minute, guys, before the release. So we're gonna watch this obviously in real time, see what the market does do to these indices. But
Yeah,
that's
you
a
got like 10 seconds.
yeah. So but that's a good conversation we gotta have as well, guys, in terms of how the markets react based in whose office, right? Republicans have a different agenda compared to the Democrats, right? So and like I said, we'll get into that as soon as we finish watching this thing go crazy. So,
It did 75.
yes, yeah, they did, which is expected. Now, how is the market gonna react to that, right? Matter of,
Ah, thank God they did 75.
let's see. Look at this whiplash. See, this is why we're not trying to trade the initial release, right? We don't care about the. In fact, like we have no intentions of really trying to trade this family, right? So if you came here looking for signals to try to trade news, you're at the wrong channel, right? You got to go find another trader's channel that likes to gamble. That's not us. What we're trying to do is figure out what the data is, right? We got the data, 75 basis points. Now we want to see how the market reacts over the next 15 to 20 minutes just to see what price actually ends up doing because
We absorbed the crap out of that move.
this thing is flying now.
Oh my God, the 5 minute is so beautiful. You're gonna the 5 minute is something you'll see on Instagram. All the smart money traders will be like, "See, this works." They perfectly hit the order block. I'm telling you, it's like a picture. It's like a picture perfect thing. A shout out to the people that are ballsy enough to take that trade and not get slipped 200 points if they didn't, if the market wanted to fall. But that is a beautiful, beautiful, beautiful example of like a 5 minute live OB absorption action. Beautiful, beautiful, beautiful for my longs. Love to see it. Again, like I said, I'm bullish either way,
Yeah.
right? So I mean, if they did 50, you'd see a crazy, crazy, crazy candle to the upside.
Oh yeah, 100%.
Um, Interesting reaction though.
Like, look
You
at
would
these.
think. Yeah, look, the gold longs busting now again. Beautiful.
Yeah.
Look at oil. What is oil doing? Falling from the sky?
No, not really.
No, not really doing anything though. Okay, beautiful. But take a look at EU. What's EU pressed at? 99.42.
EU's flying, which is pretty like this thing is absolutely
Yeah. So
flying.
I wonder if so again like the market might be thinking the same way that I'm thinking, right? So we did 75. So now the only logical next move. So if the Fed's target is 4.5% and we're at 4%, then mathematics suggests that the only thing they can do is a 50.
Economic.
So
What's that
it's
one?
an
What's that one thing for like the economic projections? What is it called?
oh for the Fed.
Yeah, for the Fed.
Yeah, search FOMC projections, economic
Are
projections. I think
we
it's economic
are we
projections.
getting that this month or is it next month?
No, that's December 14th, which is why we stay bullish indices until December 14th. That's my exit.
Got you right. And so again, like really understanding all this, guys, is absolutely crazy, right? Like the FOMC
Yeah, click on
projections is
that.
telling us exactly what the Fed's plans are. like,
Yeah, so that's for September. Yeah, so you see 2022, you see how it's federal funds rate 4.4, and then the beginning of 2023, 4.6. So like yeah, so like look, you know that their target is 4.4 to 4.5%. That's what they want to hit in 2022.
hmm
Like we just hit 4%. So yeah, more or less they're like, right on target.
yeah,
Because again, their target is zero point 0.4, right? They're not going to do a 40 basis point hike. They'd do either a 50 or 75,
yeah,
which suggests again that going forward is probably going to be 50. Um, I mean that's also the median. They have the central tendency over there again, which is between 4 and 4.5%. So they're right on target.
yeah.
They're right on target. But if you do notice, again, look at their target for 2023 is only 4.4 to 4.5%. So it's like again, like I'm saying, we're on the tail end of them being aggressive. Like that what we just got right now might have been the last 75 basis point hike that we see from the Fed.
Mm,
And that's what the market's betting on. That's
mm.
100% what the market's betting on. Like I said, no
Oh,
matter what, you're looking at a bullish day.
that's a fact. Now I have a. Let me see. When is the next actual release? December 14th is the
December
next.
14th, yeah, is when projections comes out.
Mm, okay, interesting.
And that'll be telling too. That's why I want to get out of my buys around then because what's going to happen is they're going to do one of two things. They're either going to stay on track with these projections or they're going to find reason to raise the projections. And if they raise the projections, then everything's just going to collapse. So
Yeah, and this is
by that
crazy.
time, they have no point of like propping the market up for the holidays because the holidays are within 2 weeks. And at that point, it doesn't matter.
Yeah, this is some interesting stuff. Let's see. When did the rate hike supposed to give dollar strength? It's again pretty much what Skaggs is saying, right? It's like now the market is possibly reacting off of off of off of the what am I trying to say? It's the market itself is probably reacting to the pivot that they're probably going to be having to do very soon, right? So obviously, typically, interest rates going up is usually a sign of dollar possibly gaining strength. But since we're starting to come towards the end of the cycle of interest rate hikes, we could now start to see, people become a lot more dovish because they're going to start to anticipate the Federal Reserve to start becoming dovish, right? And that's obviously going to be more bearish for the dollar.
Yeah, let me actually real quick steal the screen
Yeah,
too.
go ahead.
Let me just show you guys something. I keep trying to tell you guys this, and maybe again, some of you are not maybe not on every session, so I'm gonna say this again, and because this is really important. What you guys need to realize again is that the bigger money is not playing the result that just came out. They've been playing that all week.
Hmm.
They've been selling into that all week.
That's a fact.
All week it's been falling. They're playing the rumor, right? The obvious rumor is the Fed was going to do a 75 basis point hike. They played into that all week long. Now that news has hit the market, and I tell you guys, the second the news hits the market, what do they look at next? It's what's next. What is next? The news that just came out that 75 basis point doesn't mean a damn thing anymore. They're done playing that. They're playing the next thing. This is why I say you stay ahead of the market. You trade the rumors. You don't trade the news release. You don't trade the news release unless you're again,
A
playing like
gambler.
me and yeah, yeah, either a gambler or yeah, whatever it may be, or maybe that was the idea. It's like he's like you wanted to play, that because you were playing the idea. I mean, you're playing you go into it knowing they're gonna do 75, and again, like I have the idea of that again. That's gonna give a bullish reaction. But if you're playing the actual result and like the fundamentals of that result, it's not always gonna work out. That's the same thing down here during CPI when you guys all thought I was crazy for buying 5 minutes after CPI. And I was like, because CPI still came out high. But it's like, yeah, it came out high, but the market's not looking at that anymore. They played that all day. They played that all week. They kept the bearish order flow all week. CPI came out, it got a spike down. From that moment, the market's looking at something else. And that's the same thing that you're getting here. They played the downside all week. All week. You guys knew. Today's Wednesday. From Sunday, it was, all sells. And then the news comes out, and now they can play again those incoming rumors. Again, you guys got to stay ahead of the market, man. Don't stay with the market. You got to stay ahead of it. The institutions are not they're not with the market. They're making the market. Right? The bigger money is making the market. They're playing ahead of you.
Hmm, that's a bar.
Yeah, trust me. Like if you think that there's market makers and people that stop hunt you and people that try to trick you, if you buy into that logic, then you should buy into the idea that they're 2 steps ahead of you.
Hmm.
So if you don't think that you're 2 steps ahead of every other trader, then you're probably the person getting wrecked. And if that hurts some feelings, it hurts some feelings, but y'all need to hear it.
No, that's powerful stuff for sure. Just really trying to understand. And again, it's something that again takes some time to really understand and learn, guys. Right? When you're understanding fundamentals, like it's not something that's gonna happen overnight. Right? It takes a lot of time, a lot of experience to really try to figure out and decipher exactly what these markets could do. Right? Because now we really have to think like the big boys, like the big institutions, the smart money. Right? We have to really try to position ourselves and be like them. What are they doing during this time? Right? Are they still worried about the information, or are they now moving past it? Right? Thinking about what's next, right? Which is pretty much what Skaggs has been talking about. And that's something as well, guys, for me that I've been also really just learning a lot more, right? Because I'm very good with understanding fundamentals and sentiment, things like that. But I need to get better with really understanding when the shift could happen, right? And not waiting for the actual data to fully shift before I start to at least make that commitment to start looking for some shifts myself, right? So it's growing pains overall, guys. A lot of things that we have to just continue to learn as traders, and understanding this data is definitely one of those.
Yeah, look at the headline that just came across my phone from the Wall Street Journal. The Fed lifted rates by 0.75 percentage point and signaled plans to keep raising them. But it's the following sentence that's everything. It also hinted at a possible slowdown in the pace of increases. Again, what I told you, mathematically, they can't do a 75 next time. They have to slow down the pace. So
Yep.
are they going to keep increasing them? Yes. Are they slowing down the pace? A high probability. That's 80% what's going to happen at the next meeting is that they're going to announce that they're going to slow the pace of it going forward. Which I've been saying this 2023 is going to be the year of accumulating. You're now in November of 2022. Again, not I don't care what you guys do with your financials, but I'm letting you guys know I will be accumulating assets hard. Hard. I'm not waiting. These people that are just saying, "Oh, I'm gonna wait for 10K Bitcoin." That's cool. You wait all you want. Have fun waiting. But you should get. I'm not even gonna say you should. I don't care what you guys do. I'm not even giving you advice. And to be quite honest with you, you probably shouldn't even follow me. But I'm gonna go aggressive on buying assets because again, I see that things aren't gonna get worse. They're not gonna exactly get better, but they're not really gonna get much worse. And there's a lot of opportunity there. So
Mm.
take from it what you will. But again, I don't think we see another 75 basis point hike out of the Fed.
Yeah, that's gonna be interesting though to see exactly what happens now in December for sure. But I got a question for you. Looking at your chart right here on the 4 hour, right for Nas, what is volume telling you right now? Because we've seen this big push up, but I'm not seeing an increase in volume off of that move. Is there something that I'm missing?
Yeah, but this I mean this candle is two to three. I mean this 3 hours left on this 4 hour candle. What's so like I'm not really concerned about this because the candle's still open. So like a lot could happen in 2 hours. You get the press
Yeah.
conference come out. This could. What's more concerning to me and more obvious to me is that there wasn't much sell volume in this previous already closed candle. Right, like they brought price lower below these lows. They filled out some more inefficiency and they did it on very little sell effort. Like they
Mm.
put more effort, here. And this is a pretty substantial effort. So it's just like you can tell that the sellers are getting weaker and weaker. Now, I mean, obviously, in order to get like a nice continuation trend, you do need buyers to begin to step in.
Mm-hmm.
Like we've got a nice reaction to the upside, but again, does it hold? Does it close strong? There's still some questions here. Um, but yeah, there's an opportunity for buyers to very easily step into this.
Nice.
You mean you could also refine this though now, right? Like you go to like to a 1 hour, and again, you could see how the volume is very easily approaching what it was previously. So again, like one or two more candles, like you can like knock it down. Like we're not even 15 minutes post news yet,
Yeah.
so it's like this is a nice reaction, but until you get that continuation from the conference, and that's kind of what the market's waiting on, is like they want to hear, the words out of Powell's mouth now that the likelihood that they slow down is possible. Once they hear that in his tonality, this will continue. And I mean, the likelihood that you take out again. This is why I said I was going to remain bullish. Is like the built up of liquidity here is too obvious. Too obvious. They're able to drive it down all week. I wonder how the fib traders did. How the fib traders do. Yeah, look, these guys are probably ecstatic. Simple 61.8s.
He said it's static. The fifth traders.
Yeah, I wouldn't doubt it, bro. That's how they be. They got that 61.8, and they're just, whole life has changed.
Ecstatic. That also looked like a little bit of a harmonic. I mean, there's mad different patterns you could probably say.
Yeah, which is also maybe why it comes back too. Like a lot of times with the Fed news is like you get something like this, like it remains strong all day, and like they just push up into this supply, and then they just drive it back down just to bring it back up. Like a news moves like always play around like that, because like it'll still remain valid with like structure here, but it'll like just take this out as just like a funny little thing to do. But yeah, it's very common, especially when you're in like again, this is like the middle of nowhere. This is like the fact that we rallied off here is again mostly fundamentally driven. I wouldn't really say there was much other demand sitting there.
Interesting.
But yeah, there's some stuff that's looking good. Oil is still looking good. Hopefully, we get a nice 4 hour close above here. It's higher volume. Looks pretty good. Shout out to you guys that took this from Sunday. This was Sunday's analysis. Right on here, you guys can go back to Sunday's call. Said that if we push below this candle and close back above, that you guys could begin to look for buys, which are max risk at this level. Whether you were good enough to capture that right here, or if you would have waited for this and then some sort of pullback, right? Wherever your trade may have been down there, it's been moving very nicely. So yeah, shout out to that oil trade. We continue to hold this. Again, the fundamentals are intact. Sorry, this is all from like a one-on-one session. Let me just get rid of this. Necessary stuff. Yeah, EU, I would have liked to see this pull back more. This is why, again, too, I wouldn't be surprised if we take this next week. Again, just as like a funny little thing to do. I come up here and then come back. Because for me, like, I was really betting on it playing inside of here. I was really betting on it, like, taking below this candle and playing between these two structured points. But again, we don't always get what we want. I'm long from down here anyway, so I could care less. Send it to the moon. It's cool with me. But yeah, this looks like a pretty good for the bias to remain, guys. The only thing I'm gonna leave you guys with, because again, I don't have too much else to say, but I would say continue to fade the dollar into the holidays. Continue to stay bullish industries. Continue to stay bullish assets. Um, and yeah, that would be my advice to you guys.
Hmm. Yeah, nah, for sure. I mean, everything is definitely lining up that way for sure, and it really does just make sense. Again, just because of the certain situations that we have coming up as well with midterms. When is midterms? When, like 2 weeks or something like that? So I doubt Biden wants to go into midterms, guys, with a stock market that's still bleeding. All right, so there's a few things to keep in mind when it comes to that for sure.
Yeah, midterms are like actually like 5 days away. I think it's like the 7th or the 8th or something like that.
Oh yeah, so they're probably definitely gonna send these
Um,
shits higher.
yeah, and again, it is what it is. But and that's also why you have certain people in like Congress and whatnot that like were calling out to Powell. Like they're like they know they have no influence over that, but they do that for appearances, you
Hmm.
know. And that's both sides for that matter. Like even Trump, like when Trump like was spewing out about things about Powell, like okay, bro, like he's not gonna listen to you, you know. And nor do we want them to, because the second they start opening listening to each other, because like I mean they have private meetings, they have private discussions, there are things discussed between them for sure. Don't think that there's like no correlation between the two. There definitely is some, but they ultimately will, you know, use their own judgment to some degree as well.
That's a fact.
But yeah, when they start openly and doing that in public, that's when you really should worry. When they're like, "Oh yeah, yeah, no problem, bro," like that's really when you should worry.
Yeah.
I took profit on oil. I'm waiting for the pullback to end in order to re-enter. Um, yeah, I mean, listen, if you guys want to make adjustments to my trades, that's cool. But if you guys are taking my stuff, like I can't stress how important it is to hold, guys. Like, I mean, technically, again, like, look, if you were in EU with me from down here, like, again, what are you doing? You're taking profit here to what? To have to like again re-enter because you like why mess up your good entry? This is where a lot of people struggle. Like, and this is first off, let me ask you guys something, right? Who feels like they overtrade? Right? Let me get an overtrade in the chat, right? Write those words in the chat, right? I overtrade, right? Admit it to yourselves if you do. But I want to tell you guys a lot of the reason why you guys overtrade is because you just don't hold your trades. Like if you stopped closing your stuff fully and you like gave faith in your 4 hour and daily analysis, because this stuff's not going to work out. You're not going to analyze a 4 hour chart and expect it to work out in a day or two. They're going to take multiple days. That's like the entire point of trading that time frame. So it's like if you were bullish EU like me from down here and you're looking for it to go to 102, like that's going to take some time. Like this has been a 20-day trade, like literally almost a month. When it was up here, it was like a 2 week trade. Like you only have to push the button once and you can capture if you're playing these higher time frames. Obviously, if you're playing 5 minute, 15 minutes, you're gonna want to be in and out. But like some of you are over trading very simply because you're not holding stuff. You feel the need like you have to enter every day because you're not already in something. When I look at my MT4, I don't want to enter a trade. I already got like 8 open and they're open profits. So, you know, again, if you guys are over trading and you're trying to swing trade, that's definitely a problem. Let me see how many people were willing to admit that they overtrade. All
Shoot.
right, Saint, Renee,
I know that was one of
Darlin,
my
Jay,
biggest issues was
Chino.
over trading for sure.
Yeah, I struggle with the same thing. I was taking like 30 trades a day.
Facts.
Insanity. Insanity.
Yeah.
Unnecessary, bro. Trying to catch every 5 minute, 15-minute pullback. Thing runs for 30 pips. You're like, all right, cool. It's gonna pull back 20. I'm so good. I'm gonna be able to get out the perfect exit and the perfect entry. Like a lot of you know you're not good at your entries and your exits. So why are you trying to do that more? You should be trying to do that less.
Mm-hmm.
For me, you guys have great patience. Like you
Yeah.
have patience with your kids, you have patience with your job. Just don't have patience with your trading. What the hell?
I'm gonna be honest with you. Like, if they have patience in trading or not, tells me if they are patient in real life. I'm gonna be honest with you. If you're not patient in trading, you're probably not patient in real life. You probably aren't patient
Yeah,
with your.
I mean, if you're not patient in real life, you're never gonna be patient in your trading. But I've met people that are patient in real life, but are still not patient in their trading, which is an even bigger problem, I think. Because if you just don't have patience at all, no one's gonna expect that from you. But if you have it, and for some reason you're just not able to apply that in trading, I think that's a bigger miss because
Yeah.
you possess the ability to, to be patient.
Hmm.
Because the money and the emotions get you going
Oh yeah.
for sure.
Thousand
You can
percent.
be the most patient person in the world, but you see that money going up and down, and it gets a little different.
Yeah. Traders' patience is definitely a next level of ball game for sure.
Yeah, see, like look at what Ofer wrote. Truth. I've only taken the oil trade all week and 4x'd my account by just holding with a small position size, and that's a fact too. I know he's not over leveraged because he shared with me personally the chart after he just went break even. Tell them though, bro, because I know the answer, but tell them how you've been holding trade oil all week. Tell them what you did in order to accomplish that.
Facts. Give us a
Shout out to the
lesson.
people that already know this, but
Shoot, I'm ready to take notes, Ofa. Give me this lesson. I need it.
oh, I've told you the same thing, but it's all good. Watch when he puts it in the chat. That's why mentals have to be there. I've done it. I over trade. Yeah, a lot of you guys do. Gotta catch all the moves. Yes, some of you guys really do be thinking that you're that person, and like I be that way too. Like you have to have confidence, but to some degree, like if you know something's gonna pull back, it's just ask yourself, is this gonna pull back to my entry? Yes or no? If the answer is no, then just hold your trade. Don't try to master the exit in the market. I enter at least 40 times a day and blow my account every time. Yeah, that's a problem. I mean, I don't have to tell you that. You know that for sure. I mean, you should. But again, look into that.
Yo,
Like,
you are
is
you are
entering 40
hilarious,
times a
bro.
day good for you?
You are hilarious. You said some of y'all think you guys are him.
Nah, some people do. And listen, there's nothing wrong with that. I was the same way. Trust me. Like that's how
Oh
I got to
shit.
the level I was. Is like I really thought I was that person. Like I really thought I could trade every wave, every push on the 5 minute chart. And what happens is you get so locked in that, maybe you're even on fire, right? Maybe like during London, New York, you're on fire, but you don't have the discipline to stop. And then by Asian session, when the market gets a little choppier, you really think, that you're still that guy. And you end up just,
Yo, that is
you're not.
hilarious, bro. Let me see. There's a few. I passed my FTMO with one trade holding UJ buy. Let's go, Christian. I love it. I love it. I love it. Congratulations to you on the FTMO. Let's
Is
go.
that the normal Christian that we always talk about?
Mr. Legacy Christian. Yeah,
Yeah, yeah, yeah.
that's my guy.
Shout out that boy.
Bro, he's the reason why we going to Chicago and going to mess with the Chicago squad for
Oh yeah,
sure.
that's the Chicago squad. Okay.
Yeah, for
Yeah, nah,
sure.
they always too. Shout out to you guys. I passed my FTM with holding a UJ by 145.52. Yes, that's lit, bro. Let me know when you
Shit.
pass that phase two, or maybe that even was phase two. But let me know when you do that again, bro. Because I like to I like my swing traders. I like my cycle traders.
That's a fact.
Nothing against you scalpers. I hope y'all the best too.
Let's see. Abel, please. Why is the dollar bearish if the Fed hiked rates? I mean, we pretty much just talked about it, Lami. I know you might have just jumped on. It's probably just more so preparing itself for the actual pivot that we could experience. Because obviously the Fed does have a goal of reaching around 4.5, 4.6% interest rates, which pretty much only gives us around maybe 50 basis point rate hike for the next one, which will be lower than what we just did. So it's more so probably just like predicting, the next move, right? Predicting exactly what could happen next. And that's what happens when we're analyzing these markets, guys, right? It's really trying to think deeper, all right? More definitely deeper than just surface level of what we could actually expect the Fed to do next. And that's pretty much, in our opinion, why the dollar is reacting the way that it's reacting.
Yeah, read that next comment too. That's the one you wanted notes on.
Let's see. Place the trade and just log out. Your stop loss is already set. You either get your stop loss hit or you get paid. Phenomenal, phenomenal advice so far.
See that duplication though? Log out of your account.
That's the first thing he said too. That was funny. He said logged out.
Oh, place the trade and log out. He hasn't even logged in other than today. Like he let that oil run for 2 days. And I said today was making fresh highs, and he was like, "I'll bet." That means I can log in and go break even. And like yeah. Like listen, if you know that you're like it's you yourself hurting your trade, like you keep exiting too early, then remove your ability to exit the trade very simply by logging out. Now, again, he
Mm.
had his stop loss set, he had his risk set. So, again, like don't log out with no stop loss and like full margin your position and like that's not the idea. Like again, the risk was already set. All he needed to do was just remove himself from the equation. So,
Hmm. And that's actually a very
yeah,
good
big,
point
big, big,
too.
big tip.
That's a very good point that I want to bring up as well, guys. Right? Because obviously a lot of y'all goals is to grow your account, right? But if we're being honest, you guys don't want to just grow it slowly. You guys want to flip it. But you got to understand, guys, the level of emotions that it takes with the higher the lot size you push, right? Every time you up your lot size, your emotions are going to start to, act up because of that, right? So if you really want to be emotionless, drop a lower lot size. Don't initially go to a higher lot. That's not going to help out, right? Go lower. If you really want to control your emotions, then drop a lot size that's so low that you don't even remember that you even placed the trade, right? And then just let it play out. But what you guys do, and again, I take blame because I used to do the same thing, is we don't do that. On our first trade, we're trying to go the biggest lot size possible, and then we're trying to figure out why our emotions are everywhere, right? Because of the swings of the market. So the lower the lot size is probably going to be better. Just don't focus on the money right now, right? That's the reason why you guys are throwing such big lot size. You guys are trying to flip account and get paid. I get it, but right now is not the time, guys, to really focus on the money. You need to focus on really just perfecting the rules that you created for yourself. Let's see what's happening in Chicago, right? I mean, so we got a big team out there in Chicago, right? A lot of you guys that rock with us. So don't be surprised, guys, if Chicago is definitely one of the first stops next year when we go on a Profit Society tour. Because we tour, right? We don't like just being behind the computers, right? We actually like being in your guys' face and really, telling you guys what it is in person, right? So next year, guys, we will be doing a tour, and Chicago is definitely gonna be one of the first on the list because we know we have a big community over there already. Let's see what we got here. I trade like I used to smoke. That's funny as hell. Oh man. Let's see. Been in oil for a while. Had to use smaller lot size. There we go. Exactly what I just said. Free zone. That's exactly true. Let's see. Marry one or two pairs and call it a day. Yeah, I mean definitely if that works for you, 100%. I'd be up a silly bag if I helped most of my gold positions I took over the last few days. Yeah, listen. You have the awareness now, Eric. Change it now, right? Start to hold it a little bit longer. Right? Figure out exactly why you didn't hold it and then change it. Let's see, it's a percentage game. I think Powell gonna dump indices as he starts mentioning inflation. It is possible, right? Because we do. I mean, he's gonna be speaking in about 2 minutes. He's supposed to start speaking. I actually got it up over here on my YouTube as well, so I could give you guys a heads up as to when he starts actually speaking. But you never know. Based on what he says, the market is definitely gonna react a certain way. Let's see, come to Atlanta. Oh yeah, Atlanta is definitely gonna be on the list. We actually have a lot of people in Atlanta as well. Let's see. We will take Skaggs and able to see a Bears game. As long as the Bears is playing the Ravens, I'm there. All right, I'm there. Nah, I'll go to any game actually, because one of my goals is to eventually hit every single football stadium, every single baseball stadium, every single basketball arena. Like that's me. I'm a big sports fan, right? So I would love to like be able to travel to every single sporting venue in the U.S. right and just see that. So I'll definitely be down for a Bears game for sure. But if you're talking about a Bears game in January or February, hell no, ain't no way I'm going to no Bears game in the cold. I'll tell you that much. Right, so we're gonna have to wait till next September when it's a little bit warmer. Let's see, y'all coming to Texas? I mean, we love Texas. Texas is like our second home. Let's see, and looking to tighten more. Yeah, it's very possible, Eric. We're gonna see what happens, for sure. You know what I want to start doing as well, guys. Obviously, it's gonna
Look
be
at
tough
this
to do it
call.
on YouTube. But in our Zoom calls, right? Somebody like Eric, who's always provided value as well. Like, I would love to actually allow you to speak, Eric. Actually come on the mic, right? Give your insights so we can really have these conversations. So that we are all able to really come up with some type of bias, right? So, next time we do our Zoom call, Eric, let me know. If you're on, and I'd love to pick your brain as well. Let's see. So what are you looking at, Skaggs? What are you doing over here, bro?
I'm just updating some of my levels. So like when I look at my charts, I like to just be able to know if I'm waiting on liquidity to be taken somewhere and where the most recent liquidity is taken. So I just use these little, check marks here.
Okay.
So it's like, okay, cool. Like I know this liquidity is taken. Again, I'm long, we're long on this from like 1620 levels. So I mean, that's just me holding. But it's like I can just quickly glance at this. And I'm like, okay, cool. So I know I'm trading from here towards here. And I'm currently not waiting on any liquidity to get grabbed on the downside. And of course, I'm not going to be obviously buying into this nonsense, but I'm already along. So just, again, cleaning up my charts with like new levels. Again, same thing here. Like you see how these have been moved to check marks. I was waiting for this liquidity to be taken, but we've now taken this. So I can switch this over just to a check. This I can get rid of because it's irrelevant at this point. So waiting again on current targets up here.
All right. So Jerome Powell
Yeah.
is live right now. If you guys want to watch him
Good. Send
live,
everything to the moon.
let's
To
see.
the
Well, let's see
moon.
what he got to say then.
Is
Inflation
he actually
back down
speaking
to
or
our
is it just
2%
okay?
goal.
No, he's actually speaking right now. Everybody should
We
be able
have
to
both
hear.
the tools
I
that
don't
we
know
need
if
and
you
the
will be
resolve
those
it will
guys on
take
Zoom.
to restore price stability on
That's
behalf
fine.
of
I'm good.
American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored.
Markets did
Reducing
not like
inflation
that
is
statement at
likely
all.
to require a sustained period of below-trend growth and some softening of labor market conditions.
It's rebounding crazy, huh?
Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Sheesh.
Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So What I want to do is put that question of pace in the context of our broader tightening program, if I may, and talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate. And we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time. And we put that into our post-meeting statement because that really does become the important question we think now is how far to go. And I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
So I don't know if you guys noticed, but he basically did not answer that guy's
Nick Timiraos
question.
of the Wall Street
at all.
Journal. Chair Powell, core PCE
Just to throw
inflation
that
on a
out there,
3 or
he did
6
not
month
answer the
annualized
question.
basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end of at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, many different people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy, whereas if we don't get inflation under control because we don't tighten enough, Now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
All right,
So
yeah,
I
this man
think
is gonna say
as
what
we
he-
move now into
He said what he gotta say.
Yeah, it's really not gonna be much.
Yeah, after 3 questions, he's usually
It's
just
usually
repeating the same nonsense. He ain't gonna say
Yeah, I
anything
actually
different.
want to show you guys this as well now, family, right? Because I actually brought up this article. That pretty much just said exactly what Skaggs is saying, right? And these are from Wall Street strategists and traders sharing their post FOMC take, right? So just look at a few of these things, and you're gonna see. I mean, pretty much literally what Skaggs was saying is really right on the money, right? So look at this guy from BMO Capital Markets. Cumulative tightening and lagged impact suggests that this will be the last 75 basis point rate hike, and in December the move will most likely be 50 basis point. Right, we're somewhat surprised to see the soft pivot in the statement itself, and we expect that Powell will double down on this narrative on the press conference. Right, so all this was even before the press conference. So again, that's also leaning towards a 50 basis point hike. Next one, I mean, pretty much all of these are right. Like look at this one. The statement is clear that they would like to slow the pace of hikes. In addition to looking at the data and looking at the markets, they are also now considering the cumulative impact of what they have already done, and the lag with that will hit the economy. Most estimates are that it takes 9 to 12 months for rate hikes to be felt, and 12 to 18 months for the maximum effect. So we are only just now 8 months past the first rate hike, so it makes sense to slow down, right? So that's something that's very interesting for sure. And I'll actually drop this article in the chat for you guys. You guys can take some time to read it on your own. But it's very interesting to see what a few of these people are actually saying. For sure. I mean, even look at this one from Ira Jersey, right, from Bloomberg Intelligence. It makes sense for the Federal Reserve to get back to increasing rates in only 25 basis point increments by February, regardless of where the terminal rate ends up. Okay? The Fed's fund future, however, took the statement as very slightly bullish, which I'm not sure what they're talking about, right? But overall, everything is definitely leaning towards, guys, obviously, interest rates to slow down, right? By how much they're actually going to continue to raise it on. Now, one thing that I use, family, to go ahead and just keep up on what Jerome Powell is saying, especially if you're not like actually watching it live, like there's a few Twitters that like they literally like they do this stuff in real time. So this is probably my favorite one though. It's Zero Hedge. So if you guys follow Zero Hedge on Twitter, like all this channel does, guys, it literally just gives out updates to everything regarding the economy. So like as you see, like this guy is literally giving like literally second by second updates of exactly what Jerome Powell is saying. So if you guys dismiss any of those things that he said, just come back to this Telegram. There's a few other ones as well. You can go to that one. You can also go to this one right here. This Bloomberg. Walter Bloomberg is another one as well. Delta One that also does like minute to minute updates for what's happening, right, and things like that, guys. Right. So definitely take some time on your own to look over those notes, like I will. And yeah, we'll go from there, right? But what are your thoughts on this, Skaggs? What are your thoughts, bro? Because it's very interesting data that we're seeing right now, and how the markets reacted is interesting.
Yeah, I mean, the whole reason things turned around is because of what he said, about yeah, the idea that they go slower is true, but he also reinstated that they're basically going to have to raise their targets. So it's kind of like a catch-22. So like, is that the last 75? Yeah, probably. However, they're going to continue hiking for longer. So it's like they're going to slow down the pace at which they're doing it, but they're going to increase the overall goal rate. So again, they're looking forward to that December meeting where you get those projections, and the market is now again betting that they're going to come out with projections that are higher. However, I still think, and again, like, to each their own, I'll have to see how the day actually closes. But I do think this stuff once again recovers. I do think that some stuff begins to turn around here in the next 15, 20 minutes. I'm actually going to look to buy some NASDAQ, I think, here in a moment. Now that everybody kind of got just taken out, so right? So all the people that kind of chased that initial reaction are definitely now officially out of the market. So now is the time where I like to play. So don't be surprised. I might execute down here
Well,
at these
show
lower.
your screen again so we can all see what you're looking at.
Okay. Zoom is not allowing me to. There we go. All right, so you got all these people that were basically just taken out, but nothing really changed, so to speak. So again, like what happens down here is gonna be pretty critical. Again, like I'm entertaining the idea that I took a buy. What was my price? Hold on, my phone just locked. Yeah, more or less right here.
Interesting times, I tell you. Interesting times.
And I'm gonna just be running my stop below here in case things do want to get a little shaky today. Like I'm not gonna go too crazy on the idea that this turns around. But if we stall here and we sit here, I'm going to slowly kind of add myself into more positions. Again, keeping in mind, right? Like as I watch like price action down here, I have like multiple buys open. So like the risk to me here is really nothing. Is like it's all floating equity at this point. So like again, to each their own. This might be a little bit more of a reckless idea for the individual who's not, playing with house money, so to speak. But yeah, I'm watching this because again, what he said and what the markets are kind of driving off here is that they will increase their target rate, but the path that we're going to take towards that target rate will be slower or likely slower. He really dodged that question. That guy really asked him straight out, like, what are you doing in December? Like he was gonna answer. And like he was like, well, hold on, let me talk to you about these 3 points that have nothing to do with what you just asked me, but I'm gonna tell you about these 3 points anyway. And he kind of just kept going into detail about that. Again, dodging the question. That's why some of those tweets we even see, that's like they said, the next is gonna be 50, but I'm not gonna tell you it's gonna be 50. Like, you have to learn how to like read between the lines there. So again, I'm gonna be playing in this area. I would like to see if this wick kind of fills out again in the next hour candle. I wouldn't be surprised if momentum does continue. But I'll be looking for like live OBs down here and some like lower time frame volume shifts for me to kind of again to scale into more additional buys. And if they don't work, they don't work. Like, so be it. I'm not gonna cry over it. It is what it is.
Now, just
But
for the,
I do see again that I do see the week closing out stronger. Like I told you too. Like this is a classic like fuck the people that traded news, right? They got everybody all excited out over here, and like this is just liquidating everybody. So right now, this is a lot of there's a lot of money exchanging hands down here. There's a lot of volume happening down here. And if we, get back above these levels, which we opened at, then that just tells me that this was just a bunch of like liquidity money grab. Again, overreaction to some statements that he said. So if we do, for the people that want like more confirmation, like you could say even after you erase this candle that just took everybody out, that you could start again trading with the idea to the bullish side. So I'm watching closely. I just think this is a big screw you to everybody that bought into the news.
I mean, it definitely could be. Now, how much are you going to be risking on that position for everybody that's already dropping 10 standards right now off your word?
Well, again, I mean, I'm hedging this with my open positions, so I'm technically not risking anything. If you want to know what my risk is on this, if this were just a takeout and like I didn't account for anything else, this is like a 1% risk.
Okay.
Actually, probably more like a 1.3. But again, like I can again, I'm floating so much more than that in profit. So I really do, I'm not gonna get phased by it.
So the whole point is he's saying, family, is don't try to go crazy, because I know some of you guys is already throwing lot sizes on a $200 account because Skag says he's looking for a buy down there. I know y'all. Y'all not fooling me. All right.
Yeah, put it this way though, family. Like this thing could literally fall off a cliff and like fill this wick, and I would just laugh and still be in profit. Like it's not gonna hurt me. It's not gonna hurt. It is a 1.3% loss, but you guys don't see the 13-14% I'm floating, after closing 28% last week. So it's like, to each their own.
That's a fact.
Perspective.
Let's see. So, somebody said go hit my style. Actually, let me bring that up too, because I was actually in gold as well, and I also got clapped with you, like literally, because this is a idea we spoke about this morning. I spoke about it last night. Yeah, and I got clapped on that little last spike up there, right? Because I was in there. So let me actually go ahead and just show you guys what I'm looking at. I'm gonna take over the screen share really quickly. Let's see. We want to go screen number 2. Yeah, so I mean, again, look at this trade. Look at this wick, by the way, on gold. This is disgusting. All right. But yeah, we actually spoke about this opportunity, guys, on gold. On the fill, a lot of these imbalances up here, just looking to catch this last little mitigation area, and then look for that play. Now, obviously, because of what Powell said, literally only happened because of what Jerome Powell said. We've seen this crazy spike up, and then this thing just absolutely tanked, right? So I'm with you guys on this. And if anybody did end up taking this, I did end up taking an L on that as well, just because of that last little spike up. If some of you guys, for some reason, didn't actually get stopped out, I mean, then you guys are up a bag right now, all right? Something crazy. So, but yeah, that's where we're at. I do got to just update my spreadsheet, but I'll do that when I get off the call, just to account for that loss, and then we'll go from there. All right, but let's see what you guys is thinking in the building. Let's see the chat real quick. The market didn't like the word over tighten. Yeah. Yep. Let's see. I have a question. There was imbalances after yesterday's drop, and it filled it. Nice. What do you think about that? I mean, we expect imbalances, gaps, things like that are things that we could expect to fill. So there's really not much to talk about that, right? Because I mean, imbalances usually do fill. Now, how fast it fills is a different question. An imbalance could take a minute to fill. It could take an hour. It could take a week to fill. All right. So that's definitely a little bit of a trickier question to answer, just because, again, it is what it is. It was expected to happen. I'm not sure why. I don't even know what pair you're even talking about to even look at it, but yeah, it's expected to happen. Let's see. Oh my God, my friends! Shout out to that boy Jordan Morgan in the building. I appreciate you, my brother. Let's see. One of them Bloomberg millionaires owned the building I do security for. Let's go, Oscar. Right, you need to start getting buddy with that guy. Let's see. Grab the night entry on GU. Now writing her down. Thank you, PS, for your teachers. Let's go, Robert. I love it. I love to see it. Let's see. Go ahead. Yep, that same thing happened to me. Can't even really play Nas with a $200 account. Yeah, definitely don't even do it, Eric. It's not worth it. But Nas is definitely a lot easier to trade than US30 and SPX. That's for damn sure. All right. So besides that, though, family, I think we're pretty much good now. Right now, it's just allowing the market to do what it has to do. It is what it is. Skaggs told you guys what he's going to be looking for. And since Skaggs is looking for it, I wouldn't be surprised if this thing actually does end up rebounding and going back bullish. Right. So we'll see what happens after that, though.
Nah. Root for the stop loss. Root for the stop loss. Never speak optimism in a trade.
Bro, that is the craziest thing I've ever seen you do, by the way. Like,
yeah, no, talk shit about your trade, bro. That NAS isn't gonna go up. It don't have the confidence to go up.
Yeah, you got to be the only person that uses that method.
Yeah, nah. Don't speak positivity in your trades. Spook them. Don't spook them.
In other words, talk shit about your trades and it should be successful.
Yeah, don't overhype your trades. You're gonna get them all nervous. You're gonna have performance anxiety. You don't want that.
Let's see. My target's for SPY 391. Then consolidation and moves. Sonny, you've been bringing up SPY for sure a lot. Let's actually see if we could bring up the SPY that you're talking about. What are you even talking about? Do you know what? Let's see. 'Cause they said SPY 391 and then eventually to 200. Crazy. Let's see. I got stopped but caught a pre-news buy on silver. Yo, Reap, you're the only person that I know that still trades the silver religiously. Like, you've been trading silver, bro, literally for years now, and it's kind of crazy. It's not that many people I know that really focus on silver. All right, so shout out to you, bro.
That boy likes them payouts.
Yeah, he loves silver, bro.
Silver, yeah. You think gold is heavy? You never traded silver. That it's a dangerous pair. I will warn you guys. Like, don't go into silver lightly. You could do small lot sizes or it's like US 30, put it that way. It's like the US 30 of metals.
Yo, that is hilarious, though. There you got people talking shit about their trades now. Positive, negative affirmations. He said don't screenshot it either. Hell no. You never want to screenshot your trades. Like, that's law. And if you do screenshot your trades, you might as well close it out right then and there. All right, because I promise you, it's not going to play out how you want.
That's a big fact. If you ever see me screenshot, put something on my story, just know I recently closed a little bit.
Something.
That screenshot curse is real. I swear.
100% it is. All right, so I don't got anything else though. Do you have anything else, bro? You want to touch on?
No, I don't believe so. The website is still not up, so we might also see you guys on Zoom again tomorrow. If you guys are not in the Telegram, make sure you guys hop in the Telegram. I'll drop the link actually for you guys before we go down, because if you guys are not in the Telegram, you guys are missing out on updates when the servers are down or being adjusted. And you're also just missing all the notifications about all the free calls that we do. So make sure y'all hop in there. Yeah, I will see you guys in the next trading session.
That's a
And
fact.
NASDAQ, please, if you're listening, head right for that stop loss, baby girl.
Yeah. So are we? I know I'm gonna be live tonight on my specific channel, so you guys will definitely see me live tonight. For the team, you guys will see the team tomorrow, live tomorrow morning. All right, but family, I appreciate you guys. We love y'all. Thank you guys for rocking with us. Hopefully you guys were able to. Did you guys get some value today? Yes or no? Drop a 3 in the chat if you guys got some value from this session so far today. All right, because actually watching the news live and just seeing how the market's reacting, I think that's super valuable for sure for your experience levels. All right, so go ahead and drop those 3s if you did get some value. We appreciate you guys, and I will personally see you guys again tonight. I'm not sure if the boys are gonna join me, but we will be live. At least I will be live again tonight, guys. Just pretty much talking my shit with y'all again. All right, so love you guys, appreciate y'all, and I will talk to you guys soon. Have a great day, y'all.